All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2023 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. During this webcast, we welcome Volt Lithium Corp, ticker symbol of VLTLF on the OTCQB and VLT on the TSXV. Presenting is their president and CEO, Alex Wiley. Today, I've asked Alex to run through the company's slide presentation, and if time permits, we will engage in a short question and answer session. Before I do turn it over, I want to remind everyone that management is available for one-on-one meetings later today. If you've not already signed up and would like to do so, please send me an email. That's Blum, B-L-U-M, at lythampartners.com, or visit our website, lythampartners.com/virtual. Click on the one-on-one meeting request button, and we will look to get you taken care of. So with that said, let me turn the floor over to Alex to walk through the presentation. Alex, it's all yours.
Thank you, Robert. Maybe what I'll do is just give a little bit of a brief background and introduction in terms of who Volt is and where we come from, and then I'll jump into what we're doing as a business. Myself and my business partner, Marty Skase, we founded the business about 2.5 years ago. And our background is originally we come from the oil and gas industry. We looked at the opportunity with reservoirs that contain brine, and we saw a real opportunity with lithium in brines. One of the things that we thought when we originally started up the business is we better focus on building an extraction technology. We felt that an extraction technology was key. By being able to manage our technology and constantly improve it, we felt that that would be a key success factor as we build out our business. Just a little bit about Volt and where we are. I'll just run through a couple of slides here. Volt, we have our flagship asset up in Northwest Alberta. We own about 430,000 acres up in Northwest Alberta. And our focus is extracting lithium from oil field brines. So where our asset is also contains, the reservoir also contains hydrocarbons, which is oil producing today. We think that this is a successful way to build a business. One of the key things that we've seen and why we think the oil and gas industry is ripe to be a real leader in the lithium space is because there's infrastructure in place. The asset that we have, we've got almost over 100-year reserve life. So we think that by having existing infrastructure that's already permitted, it's producing, it's just not having extraction for lithium, is a compelling way to have a clear growth advantage and an earlier start from some of our peers. In terms of what we've done so far, the major milestone that we've accomplished last summer, we really perfected our technology, and we started to get really good results from a technology perspective. We ran a pilot plant in the spring of 2023, and we were very successful in our pilot plant operations. We had extraction results of over 90% from the lithium in the brines that we were testing. Big upcoming milestones that we've got over the next quarter by the end of 2023 is we're preparing a preliminary economic assessment, and we're also establishing a demonstration plant for upcoming commercial operations as we build our business. We've really focused on a 4-pillar process to get ourselves into lithium extraction. Stage 1 is our technology and our extraction process, which I'll be going through. Step 2 is a lithium production agreement. We've signed a production agreement with an oil and gas producer. The reason for that is they've got infrastructure in place. So we can get producing lithium sooner because it's producing, it's in production, it's permitted. Lithium's just not being extracted yet. I mentioned earlier, we've got a phenomenal reservoir. We've got about 99 billion barrels of brine, and we've had high concentrations for our asset up in Northwest Alberta of up to 120 milligrams per liter. And finally, the big thing that we really like is regulatory advantages. I mentioned before, having infrastructure in place gives us a critical advantage of being able to get to market sooner because our asset is already permitted. In terms of our pilot that we conducted this year, we really focused on a two-stage process. And this is really critical for us as we extract lithium from oilfield brines. Step one is removing contaminants. That is critical. For us to be able to remove contaminants and get 90% of the contaminants out of the brine prior to going into our DLE process or our direct lithium extraction process, that sets the stage for the water or the brine that we're using. Once we've cleaned the water or treated the water, we move into step two, where we do our proprietary DLE process. And again, we've had successful results in our pilot, which simulated commercial operations. We had over 90% extraction results from our pilot. What does that mean in terms of our pilot? Well, one of the things that we've tried to focus on as a business is extracting lithium from very low concentration brines. The cutoff that we used in our pilot was 34 milligrams per liter. That was really important for us because what we know is that not just our asset up in Rainbow Lake, up in Northwest Alberta, but brines across North America have low concentration. Oil fields across North America have low concentration brine, lithium in that brine. We look at places like the Permian, they're 40 to 50 milligrams per liter. We look at the Haynesville, we look at the Marcellus. They've all got lithium in their brines, and our extraction technology works on all those types of brines. Now, what we've also done is we've ran our process at higher lithium concentrations because our asset has up to 120 milligrams per liter. And in that, we've been successful in recovering up to 97% from a lithium extraction perspective. So we're very excited and encouraged by the results that we had. Now, what we also wanted to do in our pilot was, it's nice to get extraction recoveries, but we also wanted to demonstrate that we can do this efficiently. At 120 milligrams per liter, we've been able to run our operating costs at under 4,000 a ton. That's really important for us because as we see with the lithium market, as we move into the future, being a low-cost producer is going to be critical. The other thing, as mentioned, because we've been able to get that 34 milligrams per liter cut off with 90%, we open up multiple oil fields across North America, which we think is an exciting prospect for growth for Volt. In terms of the production agreement that we signed, just a couple of points on this. One is the pictures here show the size of a lease. Our equipment fits on that lease, and that's really important because for us to be able to get into production, we don't need to have big mines. We don't have to have big sailor ponds. We can fit on an existing lease. We're not doing additional land to service, and we're not doing creating big open pit mines or anything. Another thing that's really important is in some of these oil fields, they vent natural gas. Well, they're flaring into the atmosphere and they're causing a lot of pollution. We can use that gas in our process as a source of power. And so from an environmental perspective, it's a significant reduction for CO2 emissions for the oil and gas companies, which we think is critical as we move forward. So it acts as a power source for us, and it's an ESG or pollution solution for the oil and gas companies. In terms of our asset base, just as a picture, just demonstrating that we've got 430,000 acres up here, 4.3 million tons of lithium in our resource report that we put out earlier this year. And again, at peak production, it could last for 215 years. Practically, we believe we've got up to 100-year reserve life. And again, we've had very high concentrations, and those concentrations has led to very high extraction results for us for our lithium and our DLE process. In terms of the geology itself, this is just a continuation from the other slide, but we're really focused on the high concentration part of our reservoir where we're seeing the 120 milligrams per liter in terms of concentrations. That's up to almost 40% of our asset base. So we're very comfortable that as we move into production, we've got an opportunity to get high extraction results and really be able to produce lithium on a shorter time frame because we're permitted, because we've got the concentration, because we've got our technology. Our technology partners. This is just critical for our success as we continue to build our business. A key component of what we're doing is we've got our lab based up in the Nanotechnology Research Center in Northwest Alberta. This is so important. What we found, we ran our pilot in the spring of 2023, and we continue to make technological improvements to our process. Our extraction process works very well. Now it's all the other components that we continue to drive forward. We leverage off the Nanotechnology Research Center. Ultimately, what that does is it drives down our operating costs for our business. So we're pretty excited about that. The lithium market, people generally know that there's going to be a shortfall of lithium as we move into the latter part of the 2020s as EV demand picks up. And we're very encouraged that we can be a big part of meeting that supply chain because we're working in producing fields today. The economics, even though there's been a drop in the price of lithium, at 4,000 a ton from a operating cost perspective, we're still extremely profitable. So the recent pullback in the lithium price does not deter us at all. In terms of the regulatory visibility for our flagship project in Alberta, as I mentioned earlier in the presentation, we're in discussions with our regulator. They're encouraged because we're using existing infrastructure. They understand the reservoir and how it's been produced because the reservoir has been producing for a long time. It just hasn't been producing lithium. It's been producing lithium, it just hasn't been extracted. So we're very encouraged that we can use what's in place today from a infrastructure and regulatory perspective so we don't have to create new regulations, which will allow us to get into production sooner. There's a number of groups that we look to in terms of comparable companies out there. My comment on this slide is just we're excited by where we're at. We believe that this is an opportune price point for where we're at, and we'll continue to drive forward the business as we move forward. Finally, our commitment to sustainability. I mean, it's critical for us. Our footprint's smaller than what you'd see in a typical hard rock mine. Our commitment to reduce CO2 emissions, not only from the EV perspective, but also on site. Reusing gas as opposed to flaring it off is a huge opportunity for the oil and gas industry that we're going to use for our production that's going to drive down CO2 emissions. And we think that's going to be critical as we move forward in the business. Finally, we've got a diverse board, a strong board, and we're really excited about the skill sets that each of the members of the board brings so that we can continue to show proper governance as we build our business out into the future. So that's a little bit about Volt, and wanted to thank you for allowing me to spend some time presenting, Robert.
Perfect. No, thank you very much for that that sort of run through there. Couple of questions here in the few minutes that we have remaining. You touched a little bit on hard rock mining at the very end there. You know, talk about the main differences between lithium from brine extraction and sort of hard rock mining. You know, both for, you know, from a technological standpoint, an environmental and economic perspective.
Yeah, for sure. From a hard rock versus reservoir perspective, I guess my first comment is that hard rock mining has been going on for a long time. So it's definitely proven. The capital costs are higher from a capital cost perspective. The upfront capital cost from getting into production from a lithium and brine perspective is a bit higher, but there's constant capital that you're investing from a hard rock perspective. I would say the main difference from what we do versus the hard rock mining groups is our environmental footprint. So when you're creating a new mine from a hard rock perspective, there's a lot of environmental disturbance. You're at surface or close to surface, so you're mining it, you're disturbing the earth, and there's a lot of environmental issues that come. Our footprint's about 94% less. Everything's subsurface, and for us in particular, focusing on oil and gas fields, the infrastructure's in place. So our disturbance is just so much less. Now, when we look at the economic side of it, there's two components to it. It's a capital efficiency and also an operating cost perspective. From a capital efficiency, from a capital cost perspective, especially for what we're doing, it's just more expensive to do it from a hard rock mining because you're constantly having to keep exploring, keep drilling, keep moving forward as you're building your process. Our fields are producing, so we don't have to put all that capital cost into our infrastructure, which is a significant advantage. The other component when you're looking at the capital costs is permitting. it takes a long time to permit a mine. There's a whole bunch of environmental issues that you've got to deal with, land disturbance that you've got to deal with, First Nations consultations in Canada that you've got to deal with. For us, it's permitted already. It's producing already, and that's a big difference from what we see.
All right. Let's dive a little bit more into your sort of technology here. Talk about sort of the differences between yours and some of the others. I know you talked a little bit about some of the economic differences, but anything else that you can maybe add to sort of your technology versus some of the others out there?
A key component is our ability to extract low concentration lithium from brines. When you look at a lot of the direct lithium extraction technologies out there, they're focused on higher concentrations. One of the key things that we did that was a little bit different is we focused on the size of our compound. When we originally were developing our project, we were looking at a compound similar size to most others in what they use. We decided to change the size to 5 microns versus 1,000 microns. Why? Surface area. We've got 800 times the surface area from what we were originally doing, and that significantly propelled us in our ability to extract low concentration lithium from brines. And that's really opened up the door for a lot of opportunities across North America for us, not just our flagship project in Northwest Alberta.
Gotcha. You're sort of the Rainbow Lake area there. Alberta's obviously such an active oil and gas region. What other areas are out there for you to sort of access oil field brines, other basins as well throughout the US, Canada, and how can you sort of look to access some of these other regions?
Well, I think the key thing is when you compare what we're doing to the largest field in North America, the Permian Basin. I mean, they're producing 18.5 million barrels a day in total of water there, and that all contains lithium. The concentrations are 40 to 50 milligrams per liter. That's important because our technology, our cutoff is 34. Now, if you project that out, what does that mean? Well, there's a number of producers that are producing a couple million barrels a day of water. What can you do with that? You can build a plant up to 100,000 tons per annum. That's critical because it's producing today. You can move faster into lithium production than you would otherwise do if you had a mine or whatnot. There's a number of basins in the US. The Haynesville's one, the Marcellus is another. There's a huge opportunity for the oil and gas industry to be producing lithium. I'm going to point to 2 comments that happened in the second quarter of 2023. Chevron came out and said, lithium production is going to be a core competency over the next 10 years for Chevron. Why? Because they've got the lithium in their reservoirs. The key, though, is they need groups like us that can develop technologies that have experience from an oil and gas industry perspective to drive forward the extraction process on the existing fields to produce lithium.
Given sort of lithium extraction as we're talking about here is considered, I guess, a mining business to a certain extent. How is your background in oil and gas, sort of help sort of set this company apart, and or does it hinder the company in some ways?
I think it's helpful, and the reason is because lithium production from reservoirs is closer to oil and gas experience than mining, in my opinion. It's reservoir management. What do the oil and gas companies do? If you break it down, they move a lot of fluid every day. We've got that experience from our backgrounds. The key for us to extract lithium is fluid movement. I go back to the example with the Permian. They're moving a lot of fluid in the Permian every day. They're just not extracting the lithium. So it's a key critical component to have that background, to understand how the reservoirs work so that we can most efficiently extract the lithium from these brines.
And maybe the final question here, kind of help set the stage for investors over the next 6, 12, 24 months. What are sort of some of the benchmarks, metrics, growth objectives that you have for the business here?
As we move towards the end of 23, there's really 2 main things that we're focused on. One, we're going to be publishing our preliminary economic assessment. That will give people a sense of what it looks like from a volt perspective, from a capital cost for our flagship project up in Rainbow Lake. We're going to not only show our capital costs, but we're also our economics around our operating costs. I think that's going to be a key milestone for the company to see the impact of what our NPV is as we show that we can extract lithium from an oil field brine. The second thing that we're doing is we're building a demonstration plant. The key for our demonstration plant is we want to have a permanent facility. We ran our pilot earlier this year, but we're having a permanent facility to process lithium from brines across North America. Some people have asked me, Robert, well, why don't you just have a field unit that goes up to Rainbow Lake? My comment is we need a permanent facility because we see an opportunity for brines across North America, not just for Rainbow Lake. And we want a facility that can process brines from across North America. So that's going to be a key milestone for us over the next few months.
Got it. Perfect. All right. Well, we're going to leave it there. Alex, thank you very much for your time today. We greatly appreciate it. Again, I just want to remind everyone out there that if you've not already signed up for a one-on-one meeting today, would like to do so, again, send me an email, bloom@lythampartners.com, or you can visit the website, lythampartners.com/virtual. There's a one-on-one meeting request button there. Go ahead and submit your information, and we'll look to get you taken care of. So we hope everyone enjoys the conference here today. Alex, again, thank you very much for your time. Greatly appreciate it.
Thank you.